So TradingView just released a new version and a new update which is groundbreaking. Not exactly. It is a feature that has been around on many other charting platforms like Excel charts, which is what I used in the past, but they are really cumbersome, and to me, UI and UX is very important, which is why I've always stuck to TradingView. And this feature is the time price opportunity. When I use market profiles in the past on Excel charts for crypto, I've been able to trade pretty well. And so I've always been disappointed that TradingView doesn't really have market profiles. But now it does. So I'm going to share with you how to use it and is it worth paying for it? So first of all, if you want to access this, you're going to need to pay for the premium version of TradingView. So in Singapore, it's going to be $59 a month. If you get the yearly version, it's $49. And I got to tell you that it is really, really expensive. But when you look at other advanced charting platforms, this is actually very reasonable in price. But if you were to just wait, TradingView normally offers discount, especially like Black Friday and I believe Chinese New Year as well, where you get like 50, 60, and maybe 70% off. So if you're waiting to get premium, always wait for those sales, which is what I do, and then purchase it. Now let's take a look at the features instead. All right, so this is the new TPO profile. Market profiles, and it's pretty good. It looks nice, okay? Like the one reason why I like TradingView is because the UI is always brilliant. So these are the alphabets, and each alphabet corresponds to a 30-minute candle. You can change from candles all the way to TPO profiles, or you can also just search TPO and time priced opportunity will come out as well. They can help you identify point of control, poor high, poor low, single prints, value area high, and value area low. So just by looking at the profiles, we can see that this is a very good area, and I want to combine the profiles. If I were to do that, look at this. Merge, 1 second, 2 second, 3 second, 4 second, 5 second, 6 second, 7, 8, 9, 10, 11. It's almost 11 seconds, maybe 10 seconds before it merged. And if I gotta merge multiple ones, I gotta wait for another 10 seconds, and we're doing it in real life right now. This is incredibly slow, although I really like how this looks. It's just an incredibly slow, because this is the one drawback that I really do not like. You compare it to something like Excel charts, right? So if I'm going to merge a profile, and this is on another software called Excel charts, right click, merge profile, boom, it's done. This is what I normally expect. So I think that's one of the biggest drawbacks. So if you're trying to use this to backtest, it's going to be very slow, which is one of the things that I would like to do. I code a lot of things for TradingView, and so I was really happy when they announced the TPOs, because that's the one thing that was missing. But if you're willing to get past this slow profile merge, and hopefully they make it better in the future, then it's honestly not a bad platform. And since we're here, I might as well just roughly share with you. So if you're familiar with support and resistance, it's basically the same thing, but you have support and resistance based on market profiles, right? So the market profiles are all these blocks over here. All right, so for today, I'm just going to cover point of control, value area high, and value area low. So let's start off with value area high. So this is how a market profile would look like. So first of all, let's look at value area. So value area high, value area low basically means that 70% of the blocks fall within this area, right? So value area high is just the highest point, and value area low is the lowest point of that 70%. Very basic premise, all right? This isn't going to help you be a trader. You need a lot more. Basically, what we want to look for is a retest of that area. We see it fail. What we want to do is to then enter here and take profit at the value area low, stop loss just a little bit above value area high, which would normally result in like a 1:2 risk to reward ratio. That's one way. Another way to trade this is we see a breakout, a retest, and then what we will do is enter over here and then do a 1:2 risk to reward ratio again. It can potentially sometimes move all the way back down to the point of control, but normally if it crosses midway, I would just stop out. So that's basically how you use the value area high and value area low.